Hi guys, Piotr here, this is LiteFinance Global YouTube channel, and it's my pleasure to be with you again. 75 basis points hike by European Central Bank. What does it mean for euro-dollar from the trading perspective? Let's have a look, let's check what we might witness. Without a further delay, let's jump straight into the chart. Okay, so we have to start with the monthly chart. Why? Because I'm going to try to explain you medium-term bullish and bearish cases. Basically, with what we have here, the bearish case is what I'm looking for. And if you wanna get the most predictable by me target is the way we did the things here, all right, and what we are going to do, I can say from here, all right, sorry. So I'm looking with the with the most bearish case. I'm looking for this type of the move, equal move we've seen in the history. What is going to give us in that case? Is it something in correlation with other levels to the left side based on the monthly chart? Of course it is, and we were discussing some time ago about that, just the confirmation. Well, the confirmation is even after the ECB rate hike, the bulls are not able to move through the parity. We are trading right now around the parity, but also we are trading, as you can see, below the monthly chart. That's gonna be very interesting. So as you can see, if we are going to make the same in size move to the downside, all right, we are targeting this zone and consolidation ahead of the strong move to the upside. So I'm not surprised, all right, that might happen. And so in that case, we are talking about the levels close to, just one second, 92.30, 92. All right, that could be the case, the 92. Some people may laugh, but guys, we are falling strongly. We are falling strongly here, all right? We broke through 105 quite few significant levels, and the dollar is not giving up the ground here. So yes, that's the base case scenario. When we are talking about this, we are going, of course, to switch to the lower time frame to get the view from where you may want to try to trade. We have to place monthly open also. That's gonna be quite interesting here. Okay, and as of now, I would say that as long as we are below this particular zone over here somewhere, 105, 106, the case to try to join the party, it could be somehow some profit taking towards the end of the year or something like this, and then attempt to go lower. It's all about how we are going to behave, on a weekly time frame, for example, all right? So if we switch right now to the weekly time frame, okay, so look at this weekly time frame, and we are still weekly time frame. We are still below the monthly, trying to retest the second time. So from the weekly chart perspective, we have to get back above the monthly open, all right, close above that level over here, in that case we are talking about the levels close to parity and 10050. All right, so that's the very important thing. Of course, the huge reaction to the ECB we are going to see within the 24-48 hours. So it might be tomorrow or even beginning of the next week. But here, as you can see, we might have this type of the move, attempt to go higher and continuation to the downside. Attempt to go higher, continuation to go downside. That's the first approach from the weekly chart perspective, right? That you are trying to use the rejection, because I want to see the rejection first, all right? Otherwise, I'm going to wait for the retest of the monthly level, all right? But from the weekly chart perspective, channel rejection, the top of the channel, continuation to the downside, profit taking, continuation to the downside. That's how I see the things. Of course, if we are going to close above the parity, that's the first case for this rally to 105. That's how the things looks like from the weekly chart perspective, okay? Let's switch a little bit lower, because it was very interesting thing day before the ECB rate decision. Strong profit taking. This is that big bull candle, right? We were trying to reject, all right? We were trying to reject, and it could be because this kind of the setup based on the daily chart, this particular two candles, right? That's the very nice setup. That's the very nice setup to try to go higher. Now, there are two very important things that we might eventually try to build swing high. So first thing first, I would be careful when it comes to the Wednesday high, all right? Or we might make different measure, meaning that we might eventually try to retest the levels related to the monthly. Look at this. Look at what was here. So in case of break, we are going to retest the parity 10050 from the monthly chart perspective, and it's gonna be all about the price action over here. So base case scenario, medium term, is retest the lower levels we were discussing a second ago. All right, but as of now, short term, we might see attempt to try to go higher to retest monthly open around, as I mentioned, 1005, 1006, right? The upper shadows over here, mid of that three black candles to the downside. That's the key. If we are going to break above, then next bullish case short term is double the range, meaning that eventually we might see 102.25, and that is going to represent this supply we've seen over here, as you can see. So be very careful. If you are trading even shorter time frame, you have to take into the consideration the levels we were discussing here. So overall, big bearish target down towards, if I'm not mistaken, 30.92, but there is an upside potential. Monthly open 102.50, 105. Only monthly close above 105 is going to give the bulls the power. With that being said, wish you a great next trading day. See you around. Take care and goodbye.